It's 2020 and currently the world is experiencing a crisis like never seen before. The coronavirus has rapidly spread across the globe, collapsing industries, hospitalising thousands of people and resulting in many fatalities. It is now that we've decided to start the Skadi podcast to help those in the financial services navigate this very uncertain future. In this week's episode, we talk to Steve Elam, partner at Cooke, and Keidan, a boutique firm of commercial disputes lawyers. If you like this podcast, don't forget to subscribe and share with your friends.
Good evening, this is the next episode of the Skadi podcast. Today we are joined by Steve Elam, who is a partner with Cooke, and Keidan. Steve, what are your specialist areas?
My specialist areas are financial litigation and sort of contentious regulatory issues.
All right, sort of contentious regulatory advice, I suppose, as well. We've obviously got quite an interesting situation at the moment. Obviously, we're all living with the fallout of the coronavirus and so on and so forth. How has that affected the field of litigation at the moment, particularly financial litigation?
I think it's affected in a couple of ways. In the medium to long term, we're almost certainly going to be relatively busy. Our world is probably like most of the commercial disputes world in that it's generally a counter-cyclical place. So where we have a downturn, that tends to result in more disputes. So we're thinking we'll be quite busy in the medium term. I suppose in the short term, the whole COVID situation is still working its way through. We're seeing some disputes arising already, but equally, as you'll know, this is it's a real cash crisis at the moment, and I think that's really having a bit of an impact on business decision making too. And frankly, litigation is expensive, so I think there are plenty of businesses at the moment where they're seeing litigation on the horizon in the future, potentially quite business critical litigation, because there's a lot of businesses in difficulty at the moment. And they may have to bring claims to try and rescue their businesses, make sure the businesses survive. But they're not sort of undertakings you want to get involved in on a whim. It's expensive and high stakes business.
So in terms of the activity that was occurring before the crisis, so I guess cases that you've been looking at towards the beginning of the year, obviously not related to the virus, but some other dispute. What happened to those? Have those carried on as normal, or have you seen a pause in that activity? What's the landscape like out there at the moment in those kind of cases?
The landscape for those cases is they're all continuing as before, which is good. I think there's a concern that any case that was ongoing through the High Court in London would be stymied really by the potential inability of the courts to grapple with COVID. But that's actually been, I think, a real plus point. The sort of judiciary and the court system has actually adapted very well, and we're all very, very quickly finding that virtual hearings are a new normal, and things that work surprisingly well, which is a real positive. I mean, I have to admit, I think I'm probably not the only litigator that was a little bit cynical as to how that would work. And I was fearing that all of the ongoing cases would suddenly be delayed by 3, 6, 9 months, which, if it means trial dates moving, can be really quite disastrous for clients. So far, that's been avoided. I mean, there have been some delays, and certainly some court dates are moving off. But for the most part, no, things are continuing as before, just with everybody doing it remotely, which is great. I'd say it's probably the new cases that are the ones that are the slightly slower burn, because you need that initial commitment to really devote to it. And frankly, plenty of businesses have got other pressures at the moment.
It is an interesting cycle, isn't it? Because obviously you mentioned that litigation is an expensive business, and obviously, hiring a man of your caliber, I'm sure, is worth every penny. But there's obviously other secondary costs, such as experts and so on and so forth. So it is an expensive business. I mean, thinking back since the time that Skadi's been operating, I think the one sort of noticeable halt, I guess, or change in our flow of expert witness business was during was after the Brexit vote, the very first vote, when the country voted to leave. And I think that uncertainty, what we saw was a number of cases that we were looking at just moved to be settled. And I guess the way we kind of thought of that was people just thinking, I've got so much else to look at. Maybe if we just sort this one out, put it to one side, settle it down, then we can get on with other business. And I wonder, is that happened in this scenario? Have you seen an increase in people moving to settle stuff so that they can concentrate on other things, or not so much?
No, not so much as yet. It's probably a little bit too early to really see if that actually is an effect of what we're all experiencing at the moment. I think that's one of those features that will take some time to filter through. I think the reality is, in most sizable pieces of litigation, the process of moving from all-out aggressive litigation to settlement discussions to resolving something, it can take quite a bit of time, a number of months, and generally a series of quite carefully structured and thought through steps. So yes, there certainly will be. I think there'll be more of that inevitably. I think you'll find that there'll be certain litigants who are committed to litigation and part way through, but will obviously be in worse cash flow and general financial situations than they perhaps were before COVID. And that will have an impact on litigation strategy, and people will be looking for exit routes along the lines you mentioned. But as yet, I wouldn't say I see a noticeable impact of that, but I'm sure it will happen.
Yeah. And obviously, again, sorry to keep harking on about how expensive litigation is and can be for people, but we are facing something of a question over solvency in the general economy. So how do you foresee that people are going to be able to fund litigation? Where is that funding going to be coming from during this crisis or afterwards?
Well, I think there will always be sectors where the cash and assets will be there to privately fund litigation. Particularly if it's business critical, then a need will be found, a way will be found to fund those disputes if they're particularly critical. The other main answer to your question is litigation funding. And that's a really increasingly important area in our world. Increasing numbers of disputes are backed by litigation funders, and we've seen already that many of the funders are out there making a lot of noise, very keen to make clear that they're sitting on decent amounts of cash ready to invest and deploy in litigation, and I think they will have an increasingly important role in commercial disputes in London over the next 1 to 5 to 10 years. Frankly, I think it's still a relatively young industry, probably 10 years or so, and it's evolved hugely and moved very, very quickly in that period of time. And I think that's now going to continue. I think you may well see perhaps more new entrants to the market, frankly, looking for other opportunities to try and generate yield and returns in what's going to be a pretty difficult worldwide economic climate for an extended period of time. So I think the market will continue to evolve, and it's inevitable. There's going to be greater numbers of litigants and claimants who don't have the liquid assets to easily bring high value litigation. So the number of opportunities for funders to get involved is certainly going to increase.
Yeah, I mean that is a very interesting aspect. I mean, one often thinks as finance and the financial markets as a place where they probably everyone would certainly wouldn't have any shortage of money, but of course that can be the case. But are there situations where claimants and litigants with funds would still opt to have their case funded by a litigation funder? Are there reasons for that it might happen?
There are, and that I'd say that's been an increased focus of litigation funding over the last probably 3 or 4 years. I think when litigation funding started out about 10 years or so ago, I did a funded case to trial. It was one of the probably very early ones. But the sector at the outset, it was all about sort of giving access to justice for impecunious claimants and finding ways to let those claimants, have their day in court. Whereas now it's really an exercise about, divesting risk and taking things off balance sheets. And for obvious reasons, post-COVID, that's going to continue to be something that's going to be quite attractive to businesses to do that, de-risk what's involved in getting involved in a sizable piece of litigation. Obviously, the downside is you give a proportion of your returns, but as long as the economics work and the claims are sizable enough, then that's obviously a pretty powerful proposition at the moment.
And just explain what you said there about it being an attractive proposition for people to move things off balance sheet. Are you saying that once something is involved in, whether it's a transaction or a business or part of a business is involved in a litigation, would it therefore be ring fenced and off balance sheet? Is that what you're saying?
I suppose I mean in the slightly more general sense that for a particular business, the month-on-month costs of paying lawyers are effectively met by the litigation funders. So
I see.
There's a positive balance sheet impact in that way.
Okay.
Yeah, that's as lawyers trying to talk accounting, Nick. So
I was getting my regulatory hat on, going, this is a very interesting area if all of this kind of stuff can go on. Well, that's interesting, Stephen. And what are you getting any inklings now? Sort of, I guess sort of canary in the coal mine kind of stuff about the kinds of litigation that you foresee we're going to be looking at over the next few years as we progress through and out of this crisis, hopefully?
Yeah, I think probably the way I'm looking at it so far is it falls into two camps, maybe. The first is the short-term disputes, and even some of those we're seeing at the moment. And they tend to be this is focusing on financial services. Obviously, there's some claims getting underway in relation to business interruption insurance is a very high profile one in looking at the business world in a broader sense. But focusing on financial services, already we're seeing disputes arising out of late March, early April market volatility, disputes over margin calls, closeouts, awkward valuation issues in very stressed, volatile times. And those are the sorts of disputes that arise quickly. Some of them, frankly, can disappear quite quickly too, but some of them will result in litigation. And then I suppose you have the slightly bigger, longer-term second category of disputes, which I can see a lot of bondholder claims. There's obviously going to be a lot of corporate defaults that we just really haven't seen yet, frankly. Despite the market sort of seeming quite rosy, I don't think those difficulties have really gone away, and they're probably going to materialise in the third and fourth quarters of this year. And that will certainly give rise to a number of issues. There's a lot of, just to take one example, a lot of press at the moment about Hertz and bondholders holding what they thought was AAA rated debt are potentially going to see really quite severe losses, and that obviously raises a number of questions as to how and why that's happened, who can claims be brought against. There'll certainly be quite a bit in the structured world as well. CLOs, for example, look quite stressed at the moment, and it'll be interesting to see if defaults take place there, and that throws up some interesting questions in terms of claims against issuers, calculation agents, the whole remit of parties involved in those structures, trustees as well potentially. One thing I'm quite interested to see, if it will arise out of all of that, is claims against rating agencies. That was a little bit of a niche thing that came up after the last financial crisis. sort of been dealt with by regulation, and those claims have been quite difficult to bring. But it was quite stark, sort of following the press through the early weeks of the pandemic and constantly reading about downgrades by the rating agencies in really quite difficult times, where you're sort of thinking, well, how have they come to that conclusion? What data are they basing that on now, where there's such volatility, and frankly, valuing things is a very, very difficult thing to do. This is obviously from the litigator, from the outside looking in, but that's quite fascinating. It'd be interesting to see if people start to look under that bonnet and see what can be done there in terms of potential claims. Obviously, a lot of them will be more backward looking in terms of initial ratings on structures or bonds, for example, that really, once you get to a position of stress, people will think, well, how could you ever have come up with that rating in the first place? And those are the interesting ones, because then investors are genuinely relying on those ratings to make their investment decisions, and that will potentially be the key to some of those claims.
And do you get a sense this time around, because obviously the rating agencies were, as you say, got huge scrutiny after the last crisis, the 08 crisis, and really the main accusation there was that they were way behind the curve and really struggled to keep up. Are you therefore feeling that they are being overly proactive in their actions to downgrade, as you said, through the volatility that was seen, or is it a case that they're still behind the curve and in fact the sort of starting place that they came from was in the wrong place, and therefore it doesn't justify where they're moving things to now? Which one are you seeing?
Probably a bit of both, I think. I think I think the answer to the question is both. The recent activity is sort of particularly interesting, and you raise a good point in that there is an issue here in that these rating agencies are sort of damned if they do and damned if they don't. If they're overly proactive in difficult times, you get people like me trying to raise eyebrows and potentially criticise them, but they'll be hit with the same criticism if they'd left it for a number of months, obviously. But those downgrades and amendments to ratings obviously have really quite significant knock-on consequences in terms of margin calls. And you'll remember, Nick, in my days when I was at MF Global, I saw that firsthand, where I was working for a business that was downgraded, and the impact on the business's margin requirements with all sorts of counterparties was huge and immediate, and it really had a huge knock-on impact in terms of what happened to that business. I'm not saying it was the cause, obviously, but it was certainly an interesting factor at a very difficult time.
No, well, I think that's an interesting point, Steve. You were in-house at MF Global, a business that got into difficulty in 2011, I think it was. I seem to remember that, as I think I was just still in the market, active at that point, before moving into the world of Skadi and trying to right the world's wrongs in the financial markets. But if you are at the centre of a situation like that, it certainly does raise your awareness, I think, and your sensitivity to something or for something. It is. I do think that this particular crisis, juxtaposed with the previous one, and thinking with your regulatory hat on for a moment, that there is such an interesting juxtaposition, because obviously 08, as we've said, there was very low touch regulation. The rating agencies under fire for not being proactive enough. Banks operating loosely, financial institutions operating quite loosely, and then come to this time around, and suddenly the banks are, or certainly at the beginning of the crisis, I think everyone has kind of caught up now due to government action, but they were certainly under fire for being overly rigorous in their application of the rules, And certainly that was the accusation. I'm not sure they were overly rigorous. I think they were probably just, going through the proper practice. But it's an interesting juxtaposition, isn't it, for this crisis versus the last one?
Yeah, it really is. Just go on NF Global and the NF Global days, which was 2011, as you say. So, 3 years on from Lehman at that point, and obviously some changes had taken place and some lessons had been learned, but it was still very early days. That was the first special administration in the UK, which was the kind of the insolvency route, whereby the FCA have a very focused and involved role. But frankly, we had to look at that and try and work out how it would work. It was new to everyone. No one really had a clue. And the FCA didn't really have a clue. We were embracing it and getting to grips with that as we went along. Obviously, compare that to now, where we've sort of had a cycle of very extensive regulation for 10, 12 years or so. It really is a very, very different situation. It's interesting, you sort of see what's come out of the FCA since the start of the pandemic, and it's all sort of focused on operational resilience and actually how well that's been working. Things have functioned well despite us all working in our spare bedrooms and getting to grips with that, which I'm sure probably wouldn't have been the case had this happened back in 2008. It would have been it'd been really very different. And it'll be interesting to see what happens going forwards. I suppose sort of looking ahead, and now we're sort of post Brexit, and what the world will be like genuinely after Brexit, when we are separated from Europe, and we're going to be in a downturn. Everyone's pretty clear about that. And there's going to be some real pressure to try and generate economic growth again. And I suppose I mean real economic growth that's not sort of artificial growth engineered by central bank stimuluses and things of that nature. And you can see that there's going to be some political pressure to try and move towards lighter touch regulation again, to try and really help that along.
I can certainly see that would be the case, and I think you are already getting noises of that, and certainly a flavour for that. And I think you're absolutely right on, the political mood music that's out there. Are there any areas where you see, some changes in regulation where they feel the need to strengthen? Have there been anything that's come out of this situation now that is attracting regulatory attention where they might strengthen regulations, or is it generally a loosening across the board, do you think?
Well, I think for now, I think the loosening maybe comes further down the track when political pressure holds sway. And certainly if you ask anyone at the FCA now, they won't want to think that there's any sort of loosening of regulation. I think for now the priorities are sort of consumer protection, and some of the other initiatives are on the back burner a little bit while we get through this situation. And obviously there's a real political desire and regulatory desire to ensure that consumers don't come out of this badly. And before the pandemic, I was doing quite a bit of work in that space involving pensions advice as sort of one example. That's only going to continue because it's a live issue and something that the regulator will keep working on and working intensely on through the pandemic and beyond. And then probably the other interesting thing to see how it plays out will be, we've had a movement over the last 18 months or so towards increased accountability of individuals with the regulator, and people having to take senior manager roles within regulated firms and potentially being on the hook in their individual capacities. That's been live for some times in some sectors, but it's much newer in other non-banking sectors in particular. And you'd think that in the ordinary course, bringing those changes in, the regulator would be looking for some some early scalps and maybe some early scapegoats in terms of finding individual misconduct that they are quite keen to sort of make an example of, to show how that new regime is going to work in practice. That's going to be quite difficult in practice now, when frankly the regulators are having to be a bit more cautious in terms of how they approach that, when everyone's grappling with that new regime, but doing so from working at home and dealing with everything else that COVID has brought in terms of all other challenges to the businesses. So it'll be interesting to see where that goes, but that's certainly another, I suppose, an evolving theme in terms of what the FCA is going to be doing going forward.
And what are the businesses that's going to encompass now? Because obviously you mentioned it goes wider than just banking. Where is that reach going to now?
Increasingly wide. It's probably more a case of, it's evolving. There are new sectors being added to it as we go, but I think pretty much, I suppose the default is that you can sort of think that most regulated sectors, that is now an issue for them, and they have senior managers in place with that responsibility and those obligations. So it's pretty much across the board. There's not really very much left that doesn't fall within the scope of that.
And I guess sort of, away from that, I mean, one I think unexpected part of this crisis, which was an episode, was the move to negative oil prices, which seems to have caught a number of the brokerage houses out, particularly around their modelling, the capability of models to take negative prices. And then just on the word negative again, there's a lot of talk of moving to negative rates and so on and so forth. So I wonder whether there might be some attention around that kind of impact on modelling, for example. Are you seeing any potential cases relating to what occurred with the negative oil price movement at all?
I wouldn't say I've personally seen a nice case on that that's come across my desk. I'd love to see one, but no, certainly look, anecdotally there are. There will almost certainly be disputes out there around, and I've sort of read about some of them. That was a pretty extraordinary situation, and it's a pretty perfect example of extreme volatility and causing, creating risk and creating losses really quite quickly. I think it probably wasn't really helped by a lot of inexperienced commodities investors jumping in at certain points in March and April. But yeah, there are, and you can see that some of those market movements and volatility have uncovered frauds in other parts of the world. I think there's a big oil trading fraud in the Far East in Singapore that's been uncovered. That's another good theme actually for disputes post-COVID. It's pretty well known that when times are tough and markets are volatile and difficult, and we hit a downturn, then that really is the moment where frauds tend to be uncovered. And there's no reason why this situation is going to be any different, be it trading related misconduct or frankly across most business sectors. I'm sure we'll see plenty of that.
And Steve, I mean, CYK really, as far as law firms go, it's a relatively young firm. I think you started 10 years ago. You're slightly older than the mighty Skadi. Are you UK focused as a business, or is Cooke, Young and Keidan working overseas at the moment? Do you have cases overseas? What's your reach?
We do. Our reach is pretty global. So we are a UK firm. I mean, as you say, we're 10 years old. So we were a child of the last financial crisis, and have sort of been from day one doing financial disputes arising out of that, and ironically are still doing those, and even new ones are still coming up. But in answer to your question, yes, we're based in London, but it's a global reach. Obviously, one of the beauties for us is that here in London, in the UK, we have an excellent court system, an excellent legal system, and English law is very highly respected around the world. And frankly, we can have disputes in the courts in London, or arbitrations heard in London, maybe heard elsewhere, that will be ultimately arising out of contractual documents, be it banking, financial, or anything else, that are to be determined by reference to English law and English courts. That's still, despite Brexit, I think, and hopefully this won't change, it's still a very well-respected system that sort of drives commercial parties to choose English law and English courts. So that drives a lot of our work, and it does mean that huge amounts of it are international. In fact, probably most of it has an international element in some form or other. And for law firms like ours, there's different ways you can do it. Obviously, there are very large firms with offices in all corners of the world, but to the extent we need to work with law firms in different jurisdictions, we've got very sort of good networks and contacts, and increasing numbers of firms with I suppose sort of similar dynamics to us in terms of size of the business and what we're looking to do, focusing in litigation and dispute resolution only, as opposed to being a full service firm. That specialism and is something that's quite attractive to many clients and other firms that we end up working with.
And just in terms of the sort of the day-to-day working with CYK at the moment in the crisis, and I'm imagining you're not in your London offices. Well, I can see you're at home. I don't think you've raced home from London to be with us. I'm sure you're working from home now. But our experience as working as experts is that a lot of the work that you're doing is processing documents online, reading through documentation, etc., contracts, whatever it happens to be. Have there been any particular exciting, interesting innovations, technological adoptions within law, do you think, as a result of this crisis?
I'd say probably one of the best innovations is that you get Luddites like me being forced to read documents electronically and save some trees and stop getting huge amounts of paperwork printed off and couriered around to my house. So I've been resisting that temptation. Actually, in all seriousness, what's really been surprising is just how well set up everyone is to work remotely. I still like to see things on a piece of paper, as many people do, and obviously you can do that from home anyway. It's fine. But yeah, I mean, all law firms these days have got really quite sophisticated document management systems, and we can instantly get to grips with large volumes of documents and work through them as teams, despite individuals all being in different locations. Yeah, I know it's a bit cliched now, but sort of everyone's talking about, will this really change working practices? And I think it genuinely will. I think there will be a lot more remote working and acceptance of it. That said, I really miss being in the city, frankly. Yeah. Just the sort of the buzz of it and the ability to have face-to-faces with people. I can't really wait to get back to that. As much as I love having Zoom calls with people like you, Nic, I'd rather be sat down having a beer with you in a beer garden somewhere. That'd be much more.
Well, maybe June the 22nd, I think, is when Boris has got it all lined up for us. So. So let's see. Well, Steve, thank you. That's been a really fascinating insight into what's happening in law at the moment. So thank you very, very much for being guests on our podcast. And I look forward to that beer in the near future.
Sounds good. Yeah, no problem at all. Enjoyed it.
Thank you for listening to episode 5 of the Skadi podcast. Stick with us on this journey as we, like many of you, are trying to navigate these very uncertain times. This is the Skadi podcast.